Let's take it across to Kanal as well as Naresh. Nitin Raheja will be joining in on the fundamentals too to try and dissect what the market this afternoon is looking like. Kanal, hi, afternoon. A smidge of a pickup, much like yesterday, although a lot more narrower, but today led by Pharma clearly.
Yeah, it's a case of sector rotation today because yesterday it was led by banks, financial services name, metal stocks. Today it's a different set altogether. So which means that the markets are looking at a range-based kind of a trading. So we were looking at for 24,600, 700 as a broad range for the index. As a support for the next couple of days. So I believe that that range could probably play out for the index given the way the sector rotation has played out. The good part which we are seeing on the index front in terms of data is additional bit of writing which has come back again at 24,500, 24,600 strikes on the on the put side, which means that there's been good amount of put writing which has happened at these particular strikes incrementally higher as compared to the last couple of days, which means that we are now looking at potentially 24,500 as a very strong support for the Nifty over the very near term.
Okay, so that's a near-term, support which is there for the markets. But Nitin Raheja is also with us. Nitin, hi, good to be speaking with you. What do you make of the market mood right now? It's been sideways for a while now. Do you expect this trend to really continue? Because there's no major fresh trigger that we are watching out for, are we?
No, you're absolutely right. I think we've even the results that have come out have not really been surprising on the upside. So in a sense, it's more of a settling down phase that we are seeing in the markets after the smart run up that we saw post the elections and the budget. I think we are in a phase of consolidation, and there is this whole sectoral rotation that we are seeing from time to time. In itself, it's not a bad thing because I think there is a tremendous amount of liquidity that has come in. Valuations have gone up tremendously. So I think if we get in some sort of settling down and sort of a time correction, I think it will only sort of set the stage for the next leg up. I don't also see any reason for a dramatic correction in the market because the kind of liquidity that is coming in from domestics and the kind of liquidity that is waiting in the sidelines as far as foreign investors are concerned, would probably see that any correction is bought into. So I think we are in that zone where we get into some time correction.
Okay, some time correction. That's something that's going to play out along with this sectoral churn that we've been seeing on pretty much a daily basis. But let's revisit the big mover from yesterday, and that was the entire life insurance pack, be it in SBI Life, HDFC Life, all these stocks were springing up higher. Naresh, we were chatting about these stocks just yesterday, same time. Today too, they're holding up in trade. Do you think there is a meaningful trend here, or is it just a one-off move because the space hasn't done anything for almost 2 years now?
So when we see a breakout happening after 2 years, that is generally structural in nature, wherein it continues for the next 3-6 months. So that's the case. So if you look at HDFC Life, which was the first one, which consolidated from 2019, the stock had topped out at 650. Today also we are at 700, 730. So that's gone sideways. You have ICICI Pru finally coming at a 2.5 year high. Then you have other names also. It's only SBI Life which has been a leader. So out here, it looks like a structural trend change in the whole insurance pack, and we would continue to see buying come in on every dips. So it's a buy on current levels as well as on dips with a 3 to 6 month view across the whole pack.
Okay, so that's a view coming in on insurance for the time being, but clearly the space which is doing quite well is urban consumption as well. Take a look at Nykaa, quite a bit of breakout on that one, 10% higher. Do you think, Nitin, this is the overall sequence of events playing out, all the new age tech companies firing away one after the other, because it started with Paytm, Zomato, PB Fintech did really well, and Nykaa was the underdog per se, which hadn't performed, and looks like that too is firing away. What's your view here?
So I think longer term, we're pretty positive on this whole pack because of one reason that I think post their initial listing and the fact that the VC traps have, or the PE money has sort of dried up. So we are really seeing a lot of these companies changing the business model and having a far faster path to profitability and low cash burn. And hence, as they are all sort of doing this, you're seeing the market starting to re-rate them. Among them, the belief is there will be some winners, as the trend that they are addressing is long-term and real. However, we have to yet see as more and more of these companies are coming into the public markets and getting listed, and now at valuations far more realistic than say 2 years ago. So I think clearly there is bottom up oriented, if you follow, an opportunity in some of these companies.
Okay, in the meantime, just want to take a look at what both Z as well as PVR are up to. There's been an ICICI Securities note which has come in on both with a buy rating, PVR with the target price of 2,000, Z with the target price of 195. Of course, the strong content pipeline clearly working out for PVR. They've had an excellent weekend with some of the big ticket releases like Street 2, so a strong comeback for theatre goers in that sense. And for Z as well, the note says that ad spend is likely to actually rise during festive season, traditionally as has been the spending pattern. In fact, they've gained market share in Malayalam, Hindi, Kannada as well as Tamil as well in the second quarter versus what they did in the first quarter of the fiscal year. Nitin, any of these media or exhibition stories which you like?
I like the exhibition space. However, the space has not really been a long-term value creator, and they're more of short-term tactical plays, depending on the kind of content that you see and the quality of the content that you see coming in the next 6 months. We are getting into the festival season. We are getting into the season, and normally you have a lot of new releases come around there. So there, you should look at this more as a short-term tactical play. When we had consolidation take place in the sector, we thought there would be some element of pricing power that would come about, but that is not there yet in the sector. So it's more of a short-term tactical bet.
More of a short-term tactical bet. That's the view coming in. Just watching out for what else is happening in the market right now. You of course have Deepak Fertilizers, which is doing quite well. Maharashtra Seamless is holding on quite okay. On the losing side, however, in the last few minutes, ICICI Securities has come off and it's been under pressure nonetheless. Vijay Diagnostics, Castrol India, these are some of the other names that we are watching out for. Quickly, Naresh, your view on Pharma and which are the stocks that you would recommend from that pack?
So Pharma as a space has been trending well. The names which have not done much and are looking interesting is first is Dr. Reddy's, which has been a slow and steady uptrend, so that could continue further from here on. Then there is Cipla, which has been knocking at that 1600 mark for the last few sessions. If that breaks out above 1600, could make a 10-15% move. So these are two large names which look interesting. The rest of the names are more small cap names, something like a Gufic Bio or a Copran, which are breaking out on multi-month charts. But the large cap space, we've seen a lot of names like Sun Pharma already do quite well. So I would be looking out for Cipla, Dr. Reddy's, and maybe some small cap pharma names.
Back with closing trades right here on ET now. Still pretty quiet out there and just playing around in a very narrow band from the high to the low of the day for the index today. Much unlike yesterday where it was once again a quiet start. Both then banks and in fact insurance plays picked it up in trade, and we had higher in trade yesterday. Today, of course, Nifty Bank underperforming by about almost 0.5%. But lots has been said about the railway stocks. In fact, Railways' big focus to improve and enhance passenger travelling experience as well. Railways is now planning to roll out 15,000 modern sleeper coaches in the next 3 years. The tender is the same, which is likely to be issued soon, but sources suggest that there will not be a single tender, but it will be issued in phases. Sameer Dikshit, my colleague, is here with more details. Sameer?
Railways eyes a big focus on the passenger-centric train, but we are getting to know from our sources that Railways will be rolling out 15,000 sleeper-based coaches in next 3 years, and the tenders for the same is likely to be rolled out very soon. But sources have indicated that the tender will not be in a single go. The tender for the 15,000 sleeper-based coaches will be rolled out in phased manner. Some tender will be having a quantum size of around 500 sleeper coaches, where some other might be having a 1000. So different size of tenders will be issued, but larger goal is to roll out 15,000 sleeper based coaches, and the composition will include both AC coaches as well as non-AC coaches. So with these sleeper based coaches, Railways plans to come up with more and more trains that will be not just Amrit Bharat train, but it will also include Vande Bharat trains as well. So this will provide a big opportunity to the players like BEML, Alstom and several others to come forward, take part in the tendering process, and can also back the order as well. Now, the quantum of the tender will be somewhere around 30 to 35,000 crore. This is because one LHB coach cost somewhere around rupees 2 crore. The manufacturing cost is around 15 million rupee to 20 million rupees. So this is a big tender size, and this will definitely help railways to roll out to more and more trains, and this will help to transform and upgrade the passenger traveling experience.
Okay, so railway stocks are in focus. Of late, we had seen that some of the defense companies and the PSU companies and railway names were coming off a bit, purely because they had run up quite a bit. But at least a positive news coming in now that there could be a fresh, bout of ordering that might come through. Nitin, what's your view on defense, railways, and the PSUs as a pack?
There is no two ways that from a business perspective, I think that directionally they are on a good path, whether it's defense, whether it's railways. We will continue to spend in each of these segments. The only problem is the valuations at which they trade. And that leaves very, very little for disappointment. These are typically long drawn orders, and there could be delays as far as execution is concerned. From time to time, there could be volatility as far as commodity prices is concerned. I think almost all of these stocks are today priced to perfection, leaving very little room for disappointment. So I think we're just very wary from while we believe that as a policy, the government is going to continue to spend in the area. But from as an investing perspective, I think there is very little left on the table.
Okay, that's the take on some of the railway stocks. Kunal, you've been tracking some of the liquid names as well, right? RVNL, IRCTC. What are they looking on the charts?
See, I think they are going through a process of mean reversion because, at one point of time, the likes of, IRCON, for example, the stock was almost at 340. The 200 DMA for the stock was at around 245, 255, range, which means a divergence of almost 40% higher for the stock from its long-term moving average. Same was the case with RVNL and many of the other names, IRFC, etc. In fact, the divergence was a lot more steep for many of the railway names like IRFC, where the divergence was almost 40% to 50% at one point of time. Now, what we've seen the last 2 months is a correction of this divergence which was setting into this name. It's a natural process which happens for many stocks when they get into an overbought territory or when the rally extends a bit too much for many of these names. But I believe on the way down, whenever these stocks cool off, come back to the long-term moving averages, that provides the first case of a strong buying opportunity. At current levels, for example, for the likes of IRCON, the stock is at 265 approximately. The 200 DMA is closer to 245-50 levels, which means maybe another 5% correction, 7% correction for these stocks. And it could be at a point where these stocks would probably have completed a major phase of mean reversion. So not bearish on the stock, but I think would probably expect a second round of correction, maybe a 5% to broadly 7% correction into these names, but that could actually offer good buying opportunity.
Okay, point taken. Just wanted to put the spotlight on Shriram Properties as well. We don't talk about this real estate company that often, but they've come out with a big plan for themselves. They're talking about a very strong pipeline of launches in the next few months itself, 18 to 24 months. They're talking about how they're looking at doubling their sales, tripling their revenue, and making their profits 4x over the course of next 3 years, and that's the reason that stock is fairly excited. Naresh, what's the view on Shriram Properties and any other real estate name if you like?
So Shriram Properties, after that initial bump up, a lot of block deals went sideways and was slowly drifting lower. Today is the first day where it has seen very large volumes. That's an indication of a trend change finally for the stock. And now it's all set up for a move to cross that 140 mark, which was the previous top. So in terms of stocks, continue to like Suntech Realty, which has sustained and given a breakout of a 5-year consolidation. Second would be Kolte Patil, which has finally seen some price volume bump up. The stock corrected from 550 to almost 350 levels over the last 3-4 months. Looks like a good interesting price point to enter into the stock sub 400 levels. That is the price where it was in 2018. So looks interesting. Kolte Patil could be the best risk reward as of now in the whole real estate pack.
Patil for you within the realty pack, that's what's popping on the charts. But Nitin, so good to have you on the show. We'll let you go on that note. Get in some closing trading ideas as well. Kunal, what's on your list?
So I'll pick a high risk or a high beta stock over here. That's Saman Vedanta. That's a chart which is coming back into a breakout, back again above the 50-day moving average after quite some time, for the stock. So looks attractive, closer to 445, 455 range where the stock is trading right now.
Right. Naresh, what about your closing strategies?
So that would be a buy on Hindustan Unilever. The stock has broken out of a small flag formation, and we are seeing finally momentum come up in the whole FMCG pack. The stock has been a major underperformer, so expecting it to notch up a fresh 52-week and all-time high.
Let's take.
If you like this video, then like, share and subscribe to ET Now.